that investing is something that is very good for our finances, but a big question that we often get asked is how do you actually invest and ultimately what is the best strategy? The reality is that the answer is going to be subjective to everybody. However, today we're going to be comparing two different strategies, as we're going to be looking at growth versus value investing, and asking which one is better for you, looking at the facts. So if this sounds good, make sure to watch until the end, as it is going to be a very educational video. Let's start off with a brief introduction. Investing as a whole is about putting your money into assets with the goal of generating a return over time. There are two major investment strategies that we're going to be covering, and this is growth investing and value investing. The presentation will break down both sides, both strategies, and help you guys to understand the pros and cons of both. And will also guide you into determining which one might be right for you looking at the facts. Let's start off by acknowledging what growth investing actually is. Growth investing can be described as these characteristics. It often focuses on companies that are expected to grow at an above average rate compared to others in the market. Growth investors look for companies that may not be profitable now, but could have a strong future potential. These companies are often in high growth industries such as technology and biotech. Also, e-commerce is a big one, especially in today's market. A few good examples over the past decade or so have been Tesla, Amazon, and Zoom, all of which saw rapid growth. Growth investors believe that these companies will do well and their stock prices could grow as the company grows as well, even if they are not currently profitable. Characteristics of this investment strategy are as follows. They often focus on future potential. Growth investing centers on companies with a significant potential for future growth. When we talk about risk to reward, growth stocks can be very volatile. Whilst the potential for return is great, there is also inevitably going to be a higher risk. So if the company doesn't perform or meet expectations, it could have an impact on your portfolio. When we talk about the long-term perspective, growth investors typically hold onto their stocks for the long term, as they anticipate bigger returns over longer periods of time. Let's talk about a few industries. Of course, these are going to be quite common. I'm sure you can understand a lot of these. They include technology and at the minute AI, and also sometimes emerging markets which are forecasted to do well in the future. Then we can talk about valuation, as growth stocks can be overvalued, meaning that investors are willing to pay more than the market is essentially pricing the stock where it's worth, perhaps, based on the future potential. So they see it as being worth more because of how well the company could do in the future, which means that the price could be overinflated. Let's talk then about value investing, as there are some basics to this as well. Value investing focuses on finding stocks that are undervalued in the market. These companies may not be growing rapidly, but could have strong fundamentals, like stable earnings, strong balance sheets, and good profitability. Examples of value investing may include companies like Coca-Cola, Johnson & Johnson, and Berkshire Hathaway, for example. Value investors believe that these stocks are priced lower than their true value, and the market will eventually recognize the value and the price could see a rise. There are a few key characteristics to this investing strategy too. Number one is focusing on undervalued stocks. As I'm sure you can imagine, the main goal is to focus on stocks that are trading for low or significantly less than their intrinsic value. We're looking for stable companies here too. They target companies that have a track record of stability and profitability. This strategy tends to be a bit lower risk, as value investing tends to be less volatile and offers a more stable investment approach. Sometimes we see dividends. Many value stocks pay dividends, providing a regular income source on top of your investment, of course. So that's something to consider too. Then we have the patience required, which is a key characteristic. You see, value investing requires patience, as it can take time for the market to recognize the true value, the true worth of an undervalued stock. Let's talk about growth investing. Let's talk about the pros and cons, because there are quite a few pros, but of course there are some cons, so we need to lay them out in appropriate order. Pros of growth investing could include a high return potential. Growth stocks can provide high returns if the company performs well. They also are exciting and innovative. You'll be investing in cutting-edge technologies and fast-growing sectors like AI. They also provide an element of diversification, as growth investing often spreads across many different innovative sectors, and again, that could be a good thing if you are someone looking to diversify. However, there are some risks and some cons. The first one is related to risk. These sorts of investments are a bit higher risk if we have a think about it. These growth stocks tend to be a bit more volatile, meaning that the price can rise and drop rapidly. Then we can talk about lack of profits, as many growth companies are not yet profitable. So what this means is that you're basically betting on the company's future performance rather than proven results. Then we have the market overvaluation that we spoke about, as you might end up paying more or overpaying for growth stocks if the market gets too excited about a company's future potential. And we've seen that happen at some points in the past. And again, sometimes that can result in higher risk. Companies are overvalued, people buy at the top, and then the price goes down. Now let's talk about the pros and cons of value investing. The first pro is that it is lower risk. Value stocks are generally less volatile. It makes them a little bit more conservative, and potentially, if you're looking for some more stability in investments, this could make sense. Going on to that next, we have stable companies. If you're investing in companies that have a proven track record of profitability and stability, it's likely that they could continue to do well into the future. So again, they're more stable, they've got a proven track record. If you're looking for a more generally conservative approach, this might be the best strategy for you. Then we can talk about dividends. Not all, but many value stocks pay regular dividends, giving you a passive income source. Then we can talk about market correction. Value stocks often do better during market corrections as they are already undervalued compared to the market, and that's a big thing to consider. Then we've got a few cons. A big one could be slower growth. The growth potential in these companies is often a lot slower, so the returns might not be as exciting. We could talk about missed opportunities, as by focusing on undervalued stocks, you might actually miss out on high growth opportunities in fast moving sectors. Then we can talk about the wait for the market, right? Waiting the market. It can take time for the market to realize the actual value of the stock. So obviously you could be holding it for a couple of months or even years before you actually see the value that you'd like to. So now that we've had a look at both strategies, we've looked at the positives and negatives, let's do a contrast between the two. Let's focus on growth versus value, the key differences. So we have focus. Growth investing focuses on future growth, value investing targets undervalued companies. Risk and reward. Growth equals higher risk, higher potential returns. Value is lower risk but more steady returns. Then we have the investment horizon. Growth equals long-term, aiming for big gains. Value is more moderate growth over time. We could talk about valuation. Growth companies often, or more often, are overvalued due to high future expectations, and value companies often are below their intrinsic value as they are actually waiting for the recognition. So now we've looked at all of the factors, which could be the best strategy for you. When we look at growth investing, we can talk about the fact that this is a best strategy, or it could be best for people who are willing to take on more risk for potentially higher returns. It could be ideal for those looking for innovation, disruption, and new technologies. It's great for long-term investors who are willing to handle volatility, but make sure to, of course, do your own research. Then we can look at the value approach. Both for those who are looking for more conservative and stable approaches, this could work. When we talk about who it works best for, it's actually ideal for those who want reliable companies with solid earnings and potentially dividends. Then we can talk about the fact it's great for investors who have patience to wait for the market's realized value. A combination of both is another strategy to consider, as some investors use both strategies, balancing their risk and reward to diversify their portfolio. So in conclusion, let's talk about our thoughts on both. Both strategies have their strengths and weaknesses, and choosing one depends on your financial goals, your risk tolerance, and your time horizon. Growth investing offers practical potential for high returns. However, it does come with more risk, and value investing provides stability, lower risk, and dividends, but also the catch for that is slower growth. Assets are your personal goals. Have a look at it. Have a look at what you want to do. Think about the risk level that you're willing to adapt to, think about the timeline, and think about your strategy. Whichever strategy you pick, remember to diversify for a balanced portfolio. So thank you guys for watching this one. If you enjoyed it, make sure to give it a like and subscribe if it was useful, and I hope I'll see you soon. Goodbye.